Emily Chang, and this is Bloomberg Technology. Coming up, Oracle opens up, adding new features to take on Amazon in the cloud. We'll discuss the potential competitive advantage with CEO Mark Hurd. Plus, damage control continues at Facebook with a new status update pledging more cleanup on its ads platform. The social network is adding over 1,000 ad reviewers in the wake of a congressional investigation into Russia's involvement in the 2016 U.S. election. And the big vote at Uber as the world's most valuable startup decides on what could be the largest private stock sale in history. We'll discuss the potential $10 billion SoftBank deal and the race to keep former CEO Travis Kalanick in check. First to our lead, Oracle is taking the fight to Amazon. Founder Larry Ellison is calling its new database service a revolutionary technology that'll take its cloud computing business to the next level. The company says new features will improve speed, efficiency, and pricing. For Oracle, sales tied to the new cloud technologies rose more than 50% in the last quarter and made up 16% of overall revenue. Our own editor-at-large, Corey Johnson, caught up with Oracle CEO Mark Hurd at the Oracle Open World event in San Francisco and asked about the announcement.
It's called the autonomous database. So it's not a highly automated database. It's truly an autonomous database. Things like people spend hours and hours tuning databases, trying to get them to perform, trying to quote unquote patch them, which has become a more well-known word over the past few months than it ever has before. All of this stuff that's had to be done technically now is going to be done automatically, autonomously, done by us. And there are a whole set of implications out of all this, Corey, but suffice to say it's extremely significant, a lot lower cost, much more secure, much more automated. It's just a fantastic set of announcements from our product team, and Larry made those last night.
What is the technology that allows this to work, not just sort of fixing itself and repairing itself, but more quickly?
Yeah, and it's really all done in quote-unquote machine-to-machine learning. So without getting into all of this, or machine learning, when you get into all of the technology under, we tried to stay away from that a bit last night and talk more about what it does. But it is basically the computer, our computer is basically getting smarter and smarter and smarter. The more data the computer has, obviously the smarter all of the decisions that the computer makes. So all of this tuning, it's something as simple as being able to scan your data to understand potential intrusions, anomalies. I mean, I can go through all of this in a lot of detail. I know we don't have a lot of time right now, but this is basically technology doing the work. I mean, face it, today, computers can recognize faces better than humans can.
I want to ask you about M&A. Larry Ellison said on the conference call most recently that there weren't a lot of obvious targets out there for Oracle, which I think is it seemed to me a little bit of a different view on what's out there in the marketplace. You guys obviously have a robust M&A team within Oracle. Is that a change with the notion that maybe you've acquired what you're going to need to acquire and acquisitions might slow down?
Well, I wouldn't expect, Corey, much of a change in our behavior. We've always been disciplined. I think whether you hear from Larry or from Safra or from me, you'll hear the same story. I mean, we look at things that first make strategic sense for us. We don't buy things to buy things. They have to make sense strategically. They have to make sense financially for us, or we don't do them. And then third, there has to be something that we can actually run, that we can actually optimize when it gets inside the Oracle family. And so we use those filters. And I think the only point Larry was making is compared to maybe a decade ago where there were lots of potential targets, the market is consolidating. The market is changing. The market's dynamic. And there's perhaps, I don't think it takes a lot of analysis to say there's less targets than there were before. And we'll continue to be discerning.
There are proposals before coming out of the White House with notions of repatriation of assets from overseas, and I wonder how that might change what the plans are. Would Oracle hire more? Would Oracle acquire more if there was a tax holiday and the company's able to bring some cash back?
Well, let's be clear. We've been running the company in a way to invest into the company as we speak, regardless of repatriation. So for us, we're hiring as we speak. So as you look and listen to lots of different changes in workforces and layoffs in our industry, that's not us. We've been investing, I think not 7 or 8 years ago, our headcount was about 90,000. Our headcount now is about 140,000. Some of that is M&A, but a lot of that is organic hiring in R&D and in sales. Now, that said, we would love to repatriate our cash to the U.S., and there's no question we would invest it in the U.S., yes.
So finally, when I covered your last earnings announcement, your competitors were quick to complain to me for some reason about your growth rates. And I wonder what you make of your cloud growth rate and how it compares to competitors like SAP and like Salesforce.
Well, again, listen, let's talk about our growth rates. I love it. Thank you for asking the question. Our growth rates are the highest they've been in years. So last quarter, we grew the company in total revenue 7%. That's total revenue of everything. Our cloud revenue was higher, revenue growth rate higher than any of our competitors. So our bookings were, last year we booked over $2 billion in new cloud bookings. This time last year, I had many people saying, hey, I don't think you'll ever get that done. We did and beat it. Our growth rate in Q1 in bookings was actually higher than it was the year before in Q1. So, Corey, listen, I mean, there's lots of people that say lots of things. I just say read the numbers, and we're in as good a position. Our applications business is growing. We made the biggest announcement of database we've ever made. We're pretty excited around here.
That was Oracle CEO Mark Hurd speaking earlier with our Bloomberg editor-at-large, Corey Johnson. And Corey joins us now from New York, along with our guest host for the hour, Techonomy CEO and our Bloomberg contributor, David Kirkpatrick. So, Corey, I'll start with you. Do you believe what they say, that this could really take on Amazon in the cloud?
Well, I think it's notable that they're looking at Amazon as their competition here. You know, if you think about what Oracle has done in the cloud, they've gone out and tried to offer apps, much like Oracle of old. Oracle was databases forever. If you think of databases sort of as the ground, as the dirt on which all applications will grow, applications being the plants on that dirt, the company 10, 15 years ago took that database business and went out one by one and acquired Siebel for CRM and acquired PeopleSoft for HR software. And so over time grew these other vertical businesses on top of the horizontal base of their database. But now that everything's gone to the cloud, they sort of went at it a little bit backwards, where they recognize that all databases might still be on-premise databases, but they would build applications on the cloud. So they had a lot of success selling applications. What they're announcing this week at Oracle World is a real change in their cloud offering of database, and they recognize that there's a much cruder product out there that has evolved over time to being less than crude at Amazon Web Services, and that is a competitive set that they've got to take on at a different price point, different than anything they've done before.
So, David, obviously Oracle has been playing catch-up for some time. Do you believe that this is the moment when, they can really move to the forefront and compete with some of these competitors who are at the top of the game?
Well, they're certainly not going to gain the market reputation of AWS anytime in the next 5 years, I would say. But that doesn't mean they aren't the 50,000-pound gorilla in enterprise software that can have enormous impact. And I think they're very smart to be putting a lot of emphasis on security, which is the obsession of business leaders right now. So if they can differentiate and say, hey, we're more secure than AWS, we can respond to security threats faster than AWS, that's powerful. I think they will end up being a comparably important player, possibly over the very long term. But the reality is AWS essentially defines cloud computing right now, and they will continue to for the foreseeable future.
And Corey, how would you compare Oracle to Salesforce at this point, their other sort of rival?
Right. I mean, Salesforce is principally doing one thing in cloud computing, which is CRM. Oracle is also doing some CRM, and their CRM is much smaller than Salesforce. But Oracle's trying to do everything else, right? They're trying to do human resources management software to compete with Workday. They're, of course, trying to do CRM to compete with Oracle. But the database is really at the core of all of that. So for them to have the most competitive database product in the marketplace is essential for Oracle, because there are lots of competitors out there. Microsoft's out there with its SQL Server product. You've got, of course, Amazon's offerings on the database, which are surprisingly robust. And I think a lot of people were really surprised to see them offering that, but also hosting Oracle databases on Amazon Web Services. So for them to get database right really creates a position for them to be very strong on the enterprise. It also starts to make sense of their now long-rotting Sun acquisition on the hardware side, so that they can have, you like that long-rotting?
I like it.
Yeah, very good. I'm here to help. But the notion that these guys can really make sense of this whole puzzle that Amazon interestingly put together, Oracle's really in a sweet spot to do that.
All right, Corey Johnson, our editor-at-large there. Thank you so much for bringing us that interview. David Kirkpatrick, CEO of Techonomy, you are with me for the hour. Coming up, Tesla sales break records in the third quarter. We break down the numbers, plus what it means for future demand of its Model 3. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Now, an update on Tesla's vehicle deliveries in the third quarter. Tesla shipped more than 26,000 cars and SUVs in the period, including a record number of Model S sedans and Model X SUVs. For more, let's get to David Welch, who covers automakers for Bloomberg News and joins us now from Detroit. So, David, what do you make of these latest numbers?
Well, you watch the shares in the aftermarket trades, and first they did very well. I think people read the first paragraph of the press release and said, hey, great sales for Model S, great sales for Model X. Shares shot up, and then as you read through, all of a sudden you see that there are production bottlenecks for the Model 3. That's the all-important car. It's the cheaper car. It's the high-volume car. It's the one that really make or breaks Tesla going forward in terms of cash flow, a chance at profitability. And I think investors looked at that and said, uh-oh, what does this mean? Are we going to have another set of delays from Tesla? They tend to miss their production targets and their production scheduling. I think some investors said, here we go again, and the shares are now down significantly from where they were at close today.
So Elon Musk has set some very ambitious goals, as always. I believe it was to be producing 20,000 cars per month by the end of this year. Does that seem plausible?
Well, look, this is really early production. Elon has said that they would really get into their bigger production numbers in the fourth quarter. So the fact that they're having some bottlenecks, some glitches now, is not really surprising for the third quarter. It's fourth quarter that'll really, I think, probably give a better idea in terms of where they are getting that plant up and going. But investors see this. This is a company that's never done mass production before. The Model S and Model X, they've had good numbers, but they're still relatively small volumes. And so I think they're taking a cautious approach and thinking, okay, maybe we're not going to see a big boost to earnings and to cash flow in the fourth quarter from this. It might take a little bit longer, and until they see things smooth out, maybe they're just being cautious. The shares aren't tanking; they're just taking a hit in the after hours. But look, it does kind of tell investors that this is a learning experience for Tesla to get that Model 3 going.
And what are we seeing in terms of demand for the Model 3 and how that's impacting demand for the Model S and the Model X?
That was a big question going into this. Would people who could afford a lot more Tesla really just get a car because before the S and the X were the only things on the market, and they would get this smaller Model 3 once it was available, and hey, Tesla would still be selling cars, but instead of a car that may go for $100,000 or $110,000, they might be buying a Model 3 that sells for $45,000 or some such. So that doesn't seem to be the case, because you can reserve a Model 3. Production has started. There's a lot of hype over it. If you've been waiting for your Model 3, there's at least some inkling here that there's light at the end of the tunnel, and you could get it in the next year. So the Model S and X did very well. People are still buying them, even though they would have a chance to get in line for a Model 3 right now. So I think that's what helped the shares early on. But Model 3's make or break. That's the really big car everybody's waiting on, and could be delayed.
All right, our automaker reporter David Welch joining us from Detroit. David, thanks so much for that update. Coming up, Facebook is making a push to revamp its ad buying systems in the midst of Congress's Russia probe. What the social media giant turned over to lawmakers next. This is Bloomberg. Facebook is planning to overhaul its political ad rules in the wake of a congressional investigation into Russia's involvement in the 2016 U.S. election. The company also plans to hire an additional 1,000 employees to review ads that run on the site. This coming as Facebook also says it now has handed over information to congressional investigators regarding those 3,000 ads relevant to the probe. Joining me now to discuss Bloomberg's Alistair Barr and our guest host for the hour, Techonomy CEO David Kirkpatrick. Alistair, first of all, we got some new information about just what Facebook handed over to Congress. We also got a statement from Adam Schiff, who said the American people deserve to see the ways that the Russian intelligence services manipulated and took advantage of online platforms to stoke and amplify social and political tensions. This is from Representative Adam Schiff, who's on the House Intelligence Committee. What did we learn today?
Well, one of the big things is we got some details of what these ads actually look like. So there were three examples that came out. One was a gun rights group, and then another one was an LGBT group, and then another one was even just a site for dog lovers, which people are scratching their head about, but they think it's maybe, just plant a seed and then you can lace political commentary in later on. All
created by the Russians, correct? So, what's next when it comes to testifying before Congress? Like, what else?
Yeah, so I think one of the most interesting things that the House member Schiff said today was that they're looking at how these ads were targeted. So you can target very specifically on Facebook. So they're going to look at how these Russian ads were targeted, and then this is a Democrat speaking, so you have to be careful. But he said that then if there are any similarities between the way the Trump campaign targeted their political ads, then that's going to raise some eyebrows.
Interesting statement from Zuckerberg over the weekend. He posted on Saturday on Yom Kippur, the Jewish Day of Atonement. He said, "For those I hurt this year, I ask forgiveness, and I will try to be better. For the ways my work was used to divide people rather than bring us together, I ask forgiveness, and I will work to do better." David, you know Zuckerberg well. What do you make of that statement?
It's kind of extraordinary. I think in the notes I sent you earlier, I was saying, he actually is capable of admitting when he's wrong, and that's a cool thing about it. He's not the kind of guy who can never admit error. But what's interesting when I see it now is the idea that he's more or less equating himself with Facebook, and that's sort of strange, isn't it, for a company that has 2 billion customers and, one of the most profitable companies that's ever existed, et cetera, et cetera. It's a weird moment we're in. Certainly, no company really would want to have been pulled as far into this election controversy as Facebook now has been. I absolutely believe him that he wants to do the right thing. I think it's an enormous number of right things that he has before us to do, and he doesn't even know how to do all of them.
Alistair, is 1,000 people enough? I mean, is it possible?
Well, so the key here is all these advertising programs, especially the Facebook one, that they're just so easy to use. They're self-service and they're very automated. So one of the jobs that these 1,000 people are going to do is to check, I'm an advertiser, I bought an ad. You're going to have to authenticate yourself a lot more than you used to in the past. I can't remember, I think there are 2 million advertisers on Facebook. So I imagine that those 1,000 people are only going to look at ads that have been sort of triggered by some sort of software algorithm as to, this one looks mysterious, we better have a human look at that. I don't think they'd need hundreds of thousands of people if they were going to have humans look at all of these, so it's going to be a mixture of the two.
In the meantime, we saw yet again this morning the problem of fake news. We saw stories incorrectly identify the shooter in Las Vegas. These stories ricocheted across the internet. David, is it really possible to get a handle on all of this?
I don't think anybody really knows. I think the problem is we have, in not just Facebook, but also in Google and Amazon, these new colossi that have a disproportionate weight in society, really, than any previous commercial enterprise in terms of our communications and the way we converse with one another and the way we, live. And I don't know whether we've really factored in how to manage them or whether the owners and leaders of these companies have done that. I think it's a really strange moment, like I said before, and we don't really know what to do next.
It's interesting. There's a great story in the New York Times about how fake news even helped start a rally in a small town in the United States, a political rally. And obviously there are elections going on around the world of all kinds. Can Facebook, Alistair, really stay on top of, federal and state and local elections around the world?
Yeah, I think this is a broader theme with all these big US internet companies. They were built on software and automation, and they're realizing now that they're going to have to use a lot more people. And I think that the real challenge is going to come where will the software that they develop be able to handle this type of thing with fewer humans, or are they actually going to have to hire tens of thousands of people? And if they do, they're not going to make anywhere near as much money as they used to.
David, how do you think this plays out?
I do agree with Alistair that there's a real possibility that doing the right thing in this area is going to cut into the profitability, particularly of Facebook and also Google, as these issues move forward. But I will say I'm confident that Zuckerberg and Facebook will continue taking extremely aggressive moves on the social behalf of all of us, trying to do the right thing. They really want to be good contributors to social concord. They are in a very difficult position. So I think you're going to see Congress come down on them really hard. You're probably going to see some laws come into place that will apply to them specifically, which they don't want, but they're going to basically have to accept. And that's going to happen in the EU and elsewhere as well. It's a whole new era for the relationship between regulators and these companies.
David Kirkpatrick, you're sticking with me. You'll be back. Alistair Barr, thanks so much. We'll be right back with more of Bloomberg Technology after this quick break.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with a check of your first word news. President and Mrs. Trump and Vice President and Mrs. Pence led the nation in a moment of silence this afternoon in remembrance of the victims of last night's mass shooting in Las Vegas. The deaths of 58 people and the wounding of over 500 others at an outdoor music festival was the worst mass shooting in modern U.S. history. The President and First Lady are scheduled to travel to Las Vegas on Wednesday. Islamic State is claiming responsibility for the attack, but FBI Special Agent in charge Aaron Rouse says that has not been verified.
As this event unfolds, we have determined to this point no connection with an international terrorist group. As this investigation continues, we will continue to work with our partners to ensure that this is factually, thoroughly, and absolutely investigated.
Authorities believe the suspected shooter, Stephen Paddock, acted alone. Paddock's motive is still unknown. Authorities say he killed himself. Former Arizona Congressman Gabrielle Giffords is again calling on lawmakers to take up gun control legislation. Giffords was gravely wounded in an assassination attempt 6 years ago. She and her husband, astronaut Mark Kelly, made comments outside the U.S. Capitol. Meantime, White House Press Secretary Sarah Huckabee Sanders says President Trump is focused on the victims of the shooting and that this is a time to unite the country, not to renew the gun control debate. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Tuesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Yes, the New Zealand Stock Exchange been trading for about 30 minutes now and is modestly up just by about 6 points at the moment, with the US indexes nearing record highs and the US manufacturing the highest in 13 years. So it's translating into gains for the ASX as well. Futures showing 33%, I beg your pardon, a 0.3% rise when we get trading underway here in Australia. Take a look at the Aussie dollar as well. That weakened briefly below 78 US cents overnight before recovering. We do, of course, have the Reserve Bank of Australia meeting today. The cash rate likely to remain unchanged at 1.5%, although we might see some more optimistic commentary, but no tightening bias expected. Japan, also we're seeing Nikkei futures showing some positivity. China, South Korea, markets there obviously closed as the Golden Week holiday runs all week. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Vanity Fair's new establishment summit is underway in LA, and it is an event that aims to bring together the biggest names in tech, media, business, and politics to talk about issues and innovations shaping the future. On Sunday, Vanity Fair's annual new establishment list was released, and a number of new names joined the most prestigious names in tech. Joining us now from LA, John Kelly, editor of The Hive. John, I'll be seeing you in LA for the summit tomorrow. Let's talk about this list. A lot of newcomers. Who are the notable additions this year, would you say?
Well, you know, it's funny. Our list is a lot different than other lists. It's not as algorithmic. What it really attempts to measure is some form of influence. So I think that the list was going to have to change in the Trump era, and I think that you'll find names that would have been surprising in another year, like Robert Mueller, like Marty Barrett and Dean Baquet, like Glenn Thrush and Maggie Haberman, like Jim Vandehei and Mike Allen. Because what we're really seeing more than anything is a sort of collision of media and technology, platforms that are trying to get in front of as many people as possible. You know, in the past, we've noticed that some of the thematic changes on the list have to do with everyone getting into the technology business. Now it seems like everyone is in everyone else's business, and media really is the way to do that in 2017.
So what about the notable folks who fell off? I mean, obviously, I know you guys debate this a lot behind the scenes. Like, who doesn't make the cut this year?
Well, you know, I think what's going to get more attention is who drops this year. Some of it's not necessarily a huge surprise. Evan Spiegel dropped a little bit on account of the rigors of running a public company. Travis Kalanick obviously also, you know, suffered the same fate, losing his job. Adam Newman had been on in years past. Aaron Levy had been on in years past. And I think that one note that real close observers of this list will pick up is that it's moved from being about unicorn culture in Silicon Valley to really being about where Silicon Valley meets Wall Street, meets Washington. It's this sort of global domination of the conversation. All these people and all these companies are really fighting for your attention, and so we're trying to very carefully pick the ones that are dominating that.
I found it interesting that Travis was still on the list at all, given the turn of events. You obviously did add Uber's new CEO, Dara Khosrowshahi. You had Susan Fowler, the former Uber engineer who kicked off the Uber sexual harassment investigation. David Kirkpatrick, our guest host for the hour, is still with us. David, you know a lot of these people. What's your take on who made it, who didn't, who moved up and down, and which way?
I love the list. It's such a zeitgeist sort of an embracement. You know, the range of people on there is quite extraordinary, and I actually applaud you, John, for having broadened it the way you have. And I think it's an amazingly interesting aggregation. I mean, little things. I happen to endorse the inclusion of Katrina Lake of Stitch Fix, who I actually am just writing a piece about that's coming out this week. That's an astonishing company that's going to really be in the news more and more. And let's face it, Travis Kalanick belongs on the list. He's still making big waves if you're talking about power and influence. But to have Mueller, right below all the tech leaders is really astonishing. And it just gets you thinking about what is happening in modern culture now.
That's an interesting point, David. And yeah, John, I was going to ask, how do you decide on the political side, given the upheaval that is happening in Washington and around the world?
Well, you know, Emily, to answer your previous question, we certainly debated long and hard about where Travis would be on the list. Dave makes a very good point. It'd be hard to disqualify him given the potential inroads he has to return as CEO down the line. There certainly are a number of board circumstances you can see falling into place for him. It's all longitudinal, but it does seem possible. But to go back to David's point, we're trying to measure influence. Now, I know on some level that can seem mushy. It's less algorithmic than how other lists are determined. But what we're really looking for is who has absolute power in the conversation, in the zeitgeist. We do think about those things. And this year, it just was different. There are a lot of people who are doing civic duties, whether that is journalism or running a federal investigation, that absolutely have more influence and clout than people who are running some of the most important and influential technology platforms on the planet.
John, I had spent 25 years at Fortune, so I know what it's like to be at a magazine and doing a list. I'm curious, what's it like? How hard is it to, move around the pieces? You must be like putting white, Post-its on the wall of the conference room and really having big debates. Talk a little bit about what it's like actually figuring it out as a group and how many people are involved and that kind of thing.
Well, we ask about 10 or 12 journalists to join. It's not just members of the Vanity Fair staff and the Hive staff, but also people like Dan Primack at Axios and Kevin Roose, who's now at the Times. We want it to be intentionally large and messy. This is the way the framers designed the Constitution. It's how we want to put this list together. We want to be able to have a very large pool of names to choose from. You know, that list that we originally begin with is probably twice the size of this, maybe more. And then you whittle it down over time. Obviously, you allow yourself the chance to really change it up. And then there's a very consequential meeting we have towards the end of the process with Graydon Carter, or we go through it all. And at that point, we're down to about 110 names for 100 slots. And we're literally figuring out, what does the top 25 look like? Are we being consistent in terms of who are the most impactful venture capitalists? Who are the most impactful media CEOs? Looking within each specific sector to make sure that we have those right. And then you kind of play it out on a more global level. But it is intentionally messy. It can be the pain in the neck in terms of the last week of producing this thing. But we do it intentionally because that's really the only way to get it right.
All right, John Kelly, editor of The Hive. John, I'll see you tomorrow. David Kirkpatrick, you are sticking with me. Well, on Tuesday, Bloomberg will be live, as I said, from the Vanity Fair New Establishment Summit in LA. We'll be interviewing top tech and media executives, including Disney's Bob Iger and Discovery's David Zaslav. Well, Equifax is now saying that an additional 2.5 million U.S. consumers could have potentially been affected by its massive data breach. The company says an outside cybersecurity firm completed its review and boosted its total estimate of impacted U.S. consumers to more than 145 million. The review showed no evidence that the attackers accessed databases located outside the United States. Richard Smith, who stepped down as Equifax CEO last week, will testify before 4 separate U.S. congressional panels starting on Tuesday. Coming up, Uber's board also has a big day ahead Tuesday with a possible record-breaking deal. That and their London legal troubles is next. This is Bloomberg. Now to a story we are watching. Ola scored $2 billion in a new round of funding from a group of investors, including SoftBank and Tencent, a move that'll only help bankroll Uber's fiercest rival in India. The deal will help Ola continue its focus on India and build its supply of vehicles and drivers. The funding round isn't finished yet, and the amount could change. Tomorrow, Uber's board of directors, speaking of Uber, is set to vote on whether to proceed with a $10 billion SoftBank stock deal, as well as sweeping board reforms. The deal with SoftBank could wind up being the largest private stock sale in history. Meantime, the 3 major goals inside the boardroom include to create equal voting power among shareholders, move the world's most valuable startup closer to an IPO in the next couple of years, and limit former CEO Travis Kalanick's power. On Friday, Kalanick shocked many by naming former Merrill Lynch CEO John Thain and former Xerox CEO Ursula Burns to vacant board seats that he controls. Joining us now from San Francisco, Eric Newcomer, who covers Uber for Bloomberg Tech, and still with us, our guest host, David Kirkpatrick. So, Eric, first of all, SoftBank's investing in Ola and now wants to invest in Uber. I still don't understand how any of this makes sense, but basically taking a stake in all the biggest ride-hailers around the world.
Right. I mean, I think, if these were public companies, it wouldn't be crazy. You have some general thesis that ride-hailing is a good business. You invest in all of them. Part of what makes it crazy here is that these companies sort of seem to compete in a zero-sum atmosphere where they're spending money on subsidies that cut into each other. I think, one of the reasons this SoftBank deal could get done is the hope that it would then sort of create the space for a grand bargain afterwards. So that's off on the horizon. Right now, we just have to see whether Uber is actually able to seal the deal. But, I think that's a hope down the road.
So very critical vote potentially happening tomorrow in a board meeting about this SoftBank deal. What are the terms that they're discussing?
Yeah, this is going to be a crazy board meeting. I mean, we've had so many crazy board meetings. But it's sort of a double feature in that they're deciding governance terms, sort of how control of the company works, sort of changing shareholder agreements and potentially board seats. So that's part one. And then part two is that needs to happen, it seems, for the SoftBank deal to go through, because investors like Benchmark have basically suggested that they're going to hold up the works if governance reform doesn't happen. And governance reform has been a major component of that SoftBank deal. So we sort of have two major pieces sort of in flux.
And what's your take on these new board members? I mean, are they Travis's allies? Are they going to be on his side?
I mean, they're certainly, former titans of industry, people that legitimately could have been on Uber's board in a normal process. I think, there are lots of questions. The fact that they're willing to join the board in this strange process where the board's not consulted, Travis decides by himself. I think it has some people asking whether they make sense to stay on Uber's board in the long term if Travis sort of loses this power struggle. But maybe he'll win with 3 people on his side, and hopefully some, these 2 new board members, his board seat. We have this 11 board seat. I mean, it's so much is unclear. It's not even clear if these new board members will vote tomorrow in the decisions that are getting made. They'll probably be there, it seems. Will they vote when they're just playing catch up on everything that happened? It's hard to say. So many questions.
David, the palace intrigue continues. What is your read on this?
The only thing that compares to it is the HP board back about 10 years ago, when there was all that spying and everything. But honestly, I think this is the most amazing board dynamic I've ever seen. And, one thing that listening to Eric, who's always so sage on this stuff, makes me wonder if maybe Thain and Burns actually had been interviewed and possibly were being considered for the board anyway, which of course Kalanick would have known. And maybe that, but what does he think he's going to get from them? That's the key thing that I don't really understand. Certainly, these are not shy people. We'll probably hear them get asked this in the very near future, and they're going to have some kind of answer. How much are they, his people, and how much are they there as objective board members that they ought to be? I'm nonplussed. My jaw is hanging open.
Exactly.
Yeah. Right. I think how independent these board members are is the big question. I mean, how much leverage does Travis have over them? Does he have the power to fire them if they don't vote how he wants? These are sort of the questions that are being posed to me right now. I think people are really trying to figure out, are we going to try and sort of embrace these board members and believe that they're independent or not?
Can't let you go without asking about London, because Uber's head of London is now out.
Yeah.
Dara Khosrowshahi is there this week.
Right, he's flying there, I think, right now. So
to plead with the government not to return reinstate their license.
The peacekeeping mission there. Uber is still operating in London. It doesn't seem like they're going to have to stop. The government's talking to them to try and figure it out. So he's going to make peace in London while, the far more important decision is back here at home, and he'll, I'm sure, be calling in at whatever weird hour to work on his board problems back at home while he's in London.
All right, well, more to come this week, apparently. Eric Newcomer, our valiant Uber reporter for Bloomberg Technology, David Kirkpatrick, CEO of Techonomy. As always, wonderful to have you. This is where I say goodbye to you.
Good to be here.
Thanks so much, David, for stopping by. Coming up, U.S. regulators are growing concerned and investigating a popular exchange for cryptocurrency. We will bring you all the details next. And a reminder of our interactive TV function. Find it at TV Go on the Bloomberg. You can watch us live. If you miss an interview, you can go back to it. You can send our producers a message, play along with the charts we bring you on air. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. A change at the top for Taiwan Semiconductor. Chairman and founder Morris Chang will retire in June of next year. The move will hand the helm of the world's largest producer of made-to-order microchips to the company's 2 co-chief executives. The announcement confirmed long-standing speculation about the heirs apparent and establishes a formal succession plan at the manufacturer of chips for Apple, its largest customer. Breaking with tradition, Chang used his retirement announcement to also issue a 2017 revenue forecast that surpassed analyst estimates. Meantime, Bitcoin and other cryptocurrencies have surged this year, but regulators and financial executives are concerned that investors are inflating a bubble destined to pop. Now, Coinbase, a popular exchange for these digital currencies, is facing scrutiny from the Commodity Futures Trading Commission, otherwise known as the CFTC. Regulators have requested more information about an incident in June when Ethereum, the second most valuable cryptocurrency, suffered a flash crash, plummeting more than $317 to 10 cents in a matter of milliseconds. For more on this, we're joined by our Bloomberg News reporter, Lily Katz, who broke this story. So, Lily, what more do we know about what the CFTC is looking into here?
So the CFTC they've sent Coinbase a letter with a list of questions asking for more information about that Ether flash crash in June. We know that they've asked about that initial, let me back up and just explain what happened during that flash crash. Basically, there was a big $12.5 million trade, and that triggered all these cascading sell orders. And so within 45 milliseconds, the price of Ether plunged to 10 cents from around $300, like you said. And so the CFTC is asking Coinbase for more information about that initial $12.5 million trade, as well as questions about margin trading, which is something that Coinbase used to offer as an option. And what margin trading is it's when you borrow money to buy or sell more of an asset than you might otherwise be able to. So Coinbase has since suspended that option. But those are two of the things that we know the CFTC is asking Coinbase for more information about.
What do we know about how Coinbase is currently regulated?
So Coinbase is currently regulated through sort of a patchwork system of state regulation. They have licenses in a few dozen different states, as well as Puerto Rico. They're not currently regulated by the CFTC. It's kind of this big regulatory gray area, right, for cryptocurrencies. I mean, the SEC has come out and said that some of these might be securities and should be regulated as such, and the CFTC has come out and said, well, we think they're commodities. So it's kind of a gray area.
Now, we also saw today that Goldman Sachs is, exploring starting its own Bitcoin trading venture. So on the one hand, you have regulators looking into this. On the other, you have legitimate banks looking to make a bigger bet on cryptocurrencies. What do we see more of in the future?
Well, we definitely see more startup companies, sort of coming in and entering this space, and more established companies, right? I mean, it's really interesting that Goldman might be entering, and they could definitely be a formidable competitor for someone like Coinbase, given how many more resources they would have, and potentially, the level of trust that they might have with customers being an incumbent bank.
So, what do you see coming next when it comes to these regulatory issues?
Hopefully we'll see more guidance from the SEC, the CFTC. In just the last couple of months alone, we've seen China and South Korea come out and ban these initial coin offerings. And so it seems like what's next would be more either guidance or regulation from U.S. regulators.
And what about the other cryptocurrencies, Bitcoin aside, where you're talking about Ethereum? What sort of trends are we seeing more broadly across the spectrum?
With all these different cryptocurrencies, in just this year alone, more than $2 billion has flowed into this initial coin offering space. So we're definitely seeing more and more startup companies, and we're seeing also more concern that there might be fraud in the space, which I think is why these regulators are starting to crack down.
All right, Lily Katz of Bloomberg News. Lily, thanks so much for stopping by. That does it for this edition of Bloomberg Technology. On Tuesday, I will be live in LA reporting from the Vanity Fair New Establishment Summit. We'll be on Bloomberg all day with a great lineup of guests, including Disney's Bob Iger. And a reminder, we are live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.